Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily review for Monday the 6th of December 2021. Time is 20 past 4 in the morning GMT. Asian session coming to close, European session firing up, our lunchtime, North American session. Right, Friday the 3rd of the 12th, then the last full trading day last week. We had a negative unopposed driver in the pound at minus 250. No backdoor flows, the opposing positive flows mainly going into the yen at plus 193, into the euro at plus 31, and the dollar is the positive rock at plus 26. Activity plus or minus 250. Last week then, for context, this is from Monday the 29th of November the 11th to Friday the 3rd of the 12th. We had a positive unopposed driver in the yen at plus 430, no backdoor flows, the opposing positive flows, negative flows, sorry, mainly going into the pound at minus 423, into the euro at minus 6, and the dollar was the negative rock at minus 1, activity plus or minus 430. So Friday we had pound weakness driving, and you had a sell-off in equities, and this was like via the equities transmission you're getting a positive yen off the back of an already extended positive yen, and over the week then we had this the yen driving in a positive unopposed manner to the exclusion of all else, basically euro and dollar staying fairly static, and the pound taking the brunt of it. Intraday then, this is the Asian session to about 15 minutes ago. We got a positive opposed driver in the pound at plus 67, front and back door flows mainly coming out the yen at minus 51, out the euro at minus 33, and the dollar is the positive rock at plus 57, activity plus or minus 84. So we've got reversal flows going on in the Asian session. So you've got like pound strength, whereas pound was weak, and you've got yen weakness, whereas yen was strong. So and you've got the dollar and the euro sort of static-ish in the middle. Right, we'll stop it there and write up the flows. Right, we've written up the flows then. So the euro is weak except against the Swiss. The yen is weak except against the Swiss and the euro. The pound is weak except against the Swiss and the yen. And the Swiss is weak across the board. The CAD is strong except against the AUD. The AUD is strong across the board. The NZD is strong except against the dollar, the CAD, the AUD. And the dollar is strong except against the AUD and the CAD. So what have we got? We've got Swiss weakness across the board, AUD strength across the board. We've got secondary euro weakness. So we've got weakness there, strength there, and we've got secondary CAD strength there. So, and take your pick in the middle. Right, we've got a light day today, Monday. Few bits of tier 2, usual for a Monday. And Tuesday tomorrow we've got the RBA, Reserve Bank of Australia rates decision, and we've got Euro GDP. And Wednesday we've got CAD rates decision. So data wise, there's 2 rates decisions coming in up until Wednesday. The AUD and the CAD. So we'll stop it there and write up the asset classes. Right, we've written up the asset classes then. So US dollar index, basically it's 0.717 from the high, 17% off the modelled high. Gold is 0.45 from the high, so it's just above half marks. Oil is pretty weak, 0.25 from the floor, 25% above the model floor. Wall Street, S&P Tech all had this big sell-off, 0.28 from the high Wall Street, 0.21 S&P, and 0.28 for Tech. So Tech and Wall Street are in lockstep. S&P's doing a little bit better. US 10-year and the bund, this is the price, remember. So the US 10-year is 0.25 from the high, so it's 25% below the model high in price, so yields are relatively strong, whereas the bund has broken the resistance in price, which means the yields are soft, and it's broken it plus 0.12 from the resistance, so it's broken 12%. So there's a pretty big divergence between US and Euro yields there. Copper chopping about 0.47 from the floor, just below half marks, and US steel 0.32 from the floor, about a third off the floor. So pretty soft again. Right, so let's just get rid of this and talk about what we think might happen today and this week. Well, last week we started to try to basically sell the yen just as we had this equity sell off, and we got a little bit of pasting because we were selling it in the volatile pairs AUD and NZD. So that didn't go particularly well. And what we're looking at now, so dollar, euro, yen, pound, CAD, AUD, NZD, and the Swiss. Right, well, we've got where is it? We've got a rates decision there coming on the AUD on Tuesday, and we've got a rates decision on the CAD on Wednesday. So that's Wednesday and that's Tuesday. And we've had this, basically the yen has been like screaming, and the pound has been taking the brunt of it off in the majors. And you've got all the usual risk off scenarios. So what we think is going to happen then is we've got light data today. Likely people will have a little go at buying the market, sort of mixed risk on. But when you get this sort of situation, you get this like shock in the market. You get what's known as we've modelled it, and you get what's known as like an echo effect in volatility. So if you look at the volatility, you get this like sort of spike in volatility, which was where the market sold off, and then you get this period of dirge, and then you get an equivalent echo, and you get like this sort of this echo effect, and what probably happens is you get this sort of this rise, this bounce in risk assets during this period here, and then you get this like thump down, second thump down, and maybe even a third thump down potentially. So you could get a third, but normally it's two. So you could see that. That's a possibility. So we're gonna wait for this. Potentially we'll have to assess whether it's going to be a second or third echo. We're going to wait for this. Normally you get this sort of situation where the echoes are linked there in terms of this is volatility. Anyway, that's our modelling. It doesn't really matter to you, but what I'm saying to you is that that's what's likely to happen. You're going to get a volatility echo, which will mean another second phase thump down in risk assets. So we're not going to go back into AUD NZD long against the yen until that happens. And you can see that you got a race decision on the AUD, so it's even more interesting there. So anyway, that's what we think is going to happen today. You could probably get away with some minor risk on trades, but watch out for the back end of the American session. So hope that was useful. See you again tomorrow for the daily briefing. Thanks for watching. Goodbye.